Hey everyone! Welcome to episode 6 of our crash course in Banking and Financial Institution. I am Charles Gizari ARTist, short for short, and I will be your instructor in this episode. Today, we're going to talk about deposits operation in banking, a topic that's essential for managing your money and understanding how the banking system works. But don't worry, we'll keep it simple and clear with examples. So, let's get started. First things first, let's talk about what is deposit. The term deposit refers to funds that are kept in a bank account, particularly in order to accumulate interest. Another name for the money used as security to ensure delivery of the items is called a deposit. Any transactions processed to transfer money to an entity for safeguarding can be referred to as a deposit. But since we are talking about banks, a bank deposit is when you put money into your bank account. This could be by checks, cash, or even transfers from another account. For example, you might deposit your paycheck into your savings or checking account. The bank keeps your money safe and you can use it later by withdrawing or transferring it when you need it. Banks sometimes pay you a little extra money, which is called the interest. This is for keeping your money in their banks. So deposits operations encompass all the processes related to the management and handling of customers' deposit within the financial institutions like bank and credit unions. This includes accepting deposits, maintaining accounts, processing withdrawals, and ensuring compliance with regulations. There are different types of accounts where you can deposit your money. And now, we will talk about some of the common ones. First, we have the savings account. This is an account where you deposit money for safekeeping. And in return, the bank gives you a small amount of interest on the money you keep in the account. You can take money out when you need it, but there may be limits on how often you can withdraw. It's one of the most common and basic types of bank account. This is also ideal for setting aside money you don't need to spend immediately. Next, we have the checking account. This is designed for people who need to manage daily transactions like paying bills, making purchases, and withdrawing cash frequently. Unlike savings account, checking accounts don't typically earn interest, but they provide convenient access to your money. It's meant for transactions when you need quick access to your funds. Checking accounts are commonly used for things like paying rent, buying groceries, or receiving your salary through direct deposit. This is for day-to-day transactions and great for managing your everyday spending. Third, we have the time deposit account. This is an account where you deposit money for a fixed period of time. Let's say, for example, for 6 months, for 1 year, or even 5 years. In exchange for keeping the money in the bank for that period, the bank gives you a higher interest rate. You cannot withdraw the money before the agreed term without paying a penalty. In here, you choose the length of the term when you open the account, and the bank will pay interest based on the agreed period. This is ideal for long-term saving goals, like for example, saving for a house, for a car, or tuition fees in the future. Second to the last, we have the foreign currency account. This account allows you to hold money in a foreign currency such as US dollars, euros, or other currencies rather than just a Philippine peso. This is useful if you travel often, do international business, or send or receive money in other currencies. Some banks may require a higher minimum balance to open a foreign currency account and may charge fees for currency conversion and international transfers. And lastly, we have the joint account. This is a type of bank account that is shared by 2 or more individuals. All account holders have equal rights to deposit, withdraw, and manage the money in the account depending on how the account is set up. Joint accounts are often used by couples, business partners, or family members who want to manage shared finances. This is ideal for managing shared expenses like household bills or business bills, and this is also ideal for business account where multiple people need access to the funds. So these accounts can serve different purposes depending on your financial needs, whether you're saving, paying bills, or managing money with others. So just a tip, to open a savings account, individuals must provide the personal details such as their name, occupation, address, and signature. And they can make deposits through cash, checks, or transfers, while withdrawals can be made using a withdrawal form, check, or ATM cards. So now, let's talk about on how can you actually make a deposit. First, we have the over-the-counter. You can visit a bank branch and deposit cash or checks directly with the teller. This is also a good time to ask questions and get assistance from the bank staff regarding your financial concerns. And then we have the ATM deposits. Many ATMs now allows you to deposit cash and checks 24/7. You don't have to wait for business hours and you'll get immediate confirmation of your deposit. One of the banks that offers this is BPI. You can immediately go to this machine and deposit your cash or checks. And lastly, you have the online mobile banking. With digital banking, you can deposit checks using your bank's mobile app or transfer funds between accounts online. You'll also get instant notifications about your deposit status. So with just a few taps, you can now deposit money even by just sitting around. Once your money is deposited, it's important to manage it properly. So now, we will talk about on how can you manage your deposits. First, we have the online and mobile banking. You can log into your bank account to check your balance and review transaction history. You can manage your account on the go with the help of the mobile banking apps. Set up alerts for deposits, withdrawals, or low balances so you always know what's happening with your money. You can also visit a branch to manage your deposit. You can go to the teller and provide your account details or use the deposit slip available at the branch. Once your transaction is done, you'll receive a receipt confirming the deposit that you made. And third, we have the ATM use. ATMs are also handy for checking balances or printing mini statements that shows recent transactions. And last, we have the bank statements. You'll get monthly statements from your bank either in a paper or online. Review this to make sure everything matches your records and to keep track on any fees or changes. Safety is really important when you deposit your money in a bank. In the Philippines, there's a special organization called the PDIC or the Philippine Deposit Insurance Corporation that protects your deposit. If you deposit money in a bank, your savings are insured for up to 500,000 pesos for each depositor per bank. This means that if anything happens to your bank like financial troubles, you won't lose your money. Deposits are key to personal finance. This is why we will talk about the importance of deposit operations in financial management. Budgeting. By separating your money into different accounts like checking for daily expenses and saving for the future goals, you can manage your budget better and avoid overspending. Here, we have the building savings. Depositing money regularly into a savings account helps you build your savings over time. The interest earned also contributes to the growing of your wealth. And last, we have maintaining liquidity. Having funds in a checking or savings account ensures that you always have access to cash when you need it, whether for everyday purchases or emergencies. So for the last part of our discussion, we will talk about the role of deposits in the economy. First is the bank funding. Deposits provide banks with the cash needed to lend to businesses and individuals, fueling growth in new projects. Next, we have boosting economic growth. When banks lend money, it stimulates economic activity by enabling businesses to hire and innovate new things. Stability. A strong base of deposit enhances bank stability and fosters trust in the banking system, even in challenging times. Next is interest payments. Banks offer interest on deposits, encouraging saving and increasing funds available for investment in the economy. And last, we have financial services. Deposits allow banks to provide various financial services, helping individuals manage their money and supporting overall economic growth. To sum it up, deposits do more than just help you manage your personal finances. They're also important for the economy. When people deposit money in banks, the bank uses that money to lend to others. This helps businesses grow, people buy homes, and the economy keeps moving forward. The more people save, the more money banks have to lend, creating jobs and boosting economic growth. Deposits are essential for both personal financial management and the economy. Whether you're saving for the future, managing daily expenses, or contributing to economic growth, deposits are the heart of it all. And remember, banks offer you safety, liquidity, and even interest in your money. So next time you make a deposit, know that you're not just securing your own finances. You're also helping fuel the economy and ensure financial stability for everyone. Want to learn more about personal finance and managing your money? Subscribe for more tips and tricks about banking.